go ahead and bring in our other guest. Our next guest, Marc LoPresti, is the Senior Market Strategist and CEO of Market Rebellion, and Mike Lee is the founder of Mike Lee Strategy. Good morning, gentlemen.
Good morning. Good morning.
Good morning. Yeah. So first off, I want to get your thoughts on Trump's plan to sell NATO weapons that will benefit our economy greatly. Let's start with you, Mike.
Yeah, look, I don't know how much that's going to move the dial economically. It's good to see that if we're contributing to the war in Ukraine, that it's not coming out of the U.S. taxpayer. It seems like this conflict continues to go in the wrong direction. At first, it was Zelensky that didn't want to tone it down, and now it's Putin that wants to, keep fighting till the end. So, look, I don't know that it's necessarily good news that we're selling a bunch of weapons, but it's better than us sending them there for free.
Yeah, Marc, your reaction to this, as well as the impact on defense spending, too. We've seen a real rise in defense spending because of the big, beautiful bill, and, of course, the sector in general. If you're invested in that sector, you'd be doing pretty well right now because of all of the national security implications of what we're seeing, too. Your thoughts?
Yeah, listen, there's no doubt. And when there were all of those cutbacks and the defense stocks reacted negatively, in the beginning of the second quarter, we advised folks to hold on, stay the course, and buy on those dips, right? We were buying things like the drone makers that have done incredibly well. Secretary Hegseth announcing just a couple of days ago a massive additional spend in drones and drone technology, those stocks benefiting massively. So we did sort of anticipate this, guys, that there would be this initial talk of some cutback in defense spending, part of the overall review of a big bloated government. But then once that fat was cut, we'd get down to the brass tacks, not only of national security, but of bringing spending on things like defense back here to this country. And to Mike's point, selling these things, not giving them away. This is good news for the defense industry. It's good news for the American economy. And hopefully it serves as a deterrent to further conflict in that part of the world.
Good points. Well, Peter Navarro praised President Trump's tariff plan, bringing back billions into the U.S. Your thoughts on the economic benefits of such, Mike? And the CPI numbers just came out, only 2.7%. The Fed target is 2%. So tariffs really has not impacted the working class wallet. What say you?
Yeah, so the core CPI came in line. That excludes food and energy. That was 2.9%, higher than we'd like to see it. But there's a seasonality effect to all these things. Look, these tariffs, I've been saying this on your show for months now, that the economic effect is greatly exaggerated, and there's a standard or a way of thinking in the U.S. that tariffs are basically the worst thing that anyone could ever do. And while they are definitely not ideal, they are nowhere near as bad as sold. And so I think a lot of people are starting to realize, like, what we're taught in American economic classes from day one is not exactly the truth. And there are some benefits to tariff, particularly what it can do to protect domestic manufacturing. Great examples of this where it's not inflationary and it does help domestic manufacturing are countries like India and China. So we have the least trade protections of any country in the world. And so starting to add those, as you can see, the power of our consumer, most of the costs of these tariffs are being borne by the original manufacturers or the importers, not necessarily the consumers. And so, you end up with a budget surplus, and we're annualizing it over $300 billion of annual revenue for the government, which normally I don't want to see the government have another penny. But given the state of our debt and our deficits, it's not the worst thing just in the moment that we're in right now.
Yeah, Marc, your reaction to the CPI numbers, and of course, pre-market Dow is pretty much flat. Market not really reacting too much to these latest CPI numbers.
So the numbers came in line as expected. What we did not want is to see inflation cooling more than expected. Why? That's a bad news, good news, bad news scenario, because it would give the feckless Fed, Jay Powell, more reason to delay a rate cut. But let me pull on a string that Mike just brought up. When we talk about the tariff impact on inspiring and catalyzing further domestic manufacturing here in this country, we just got another economic print, guys, 1 minute after the CPI came out just a few minutes ago, and that is the New York Manufacturing Survey. Let's talk about what that was. The economists watching that were indicating and expecting a decline in manufacturing in the state of New York of almost 10%, 9.9%. You know where that number came in? New York manufacturing here in the great state of New York up almost 6%. The numbers don't lie. The tariff plan is working.
Exactly.
Yeah.
To that point, Mike, when you look at the big, beautiful bill and all the onshoring investments into manufacturing and various industries, we're seeing the benefits starting now, not next year. And it's not just political, right? We know midterms are next year. We know there's a mayoral race right here in New York City come November. But speaking economically, I think this not only benefits New Yorkers, but we're seeing the same trends in cities all across America. What say you?
Yeah, look, the immediate depreciation for plant equipment is huge, right? So when you combine tax policy with trade policy and regulatory policy, so we haven't gotten the last part yet. There was a study that the Obama administration used to be able to regulate greenhouse gases. So Lee Zeldin is hard at work to undo that. And so by the end of the Trump first term, with all of these things in place, your manufacturing is going to be in a wildly different situation in this country. And why is that so important? It's because one manufacturing job can create up to 10 other jobs. There's a massive high productivity, high multiplier effect to this. And that is the whole point behind it, is that our manufacturing and our industrialization base is so low that with the use of artificial intelligence, in addition to trade policy, tax policy, regulatory policy, it's going to have a massive difference in growth in our country going forward. So look, from an investor standpoint, from a U.S. standpoint, I could not be more bullish.
Yeah, and President Trump, of course, is having that big AI conference today. Mark, final thoughts, if you can give us in 30 seconds.
Yeah, look, it's hard to break ranks with my colleague Mike here. We are also very bullish. We're coming into another earnings season with expectations somewhat muted because of the tariff policy. The American consumer remains remarkably strong. We think we're going to end this year very strongly. There'll be some vol along the way, but that's how smart traders make money.
Mm-hmm. Well, you know what? I feel smarter just listening to both of you, and wealthier. Marc LoPresti, Mike Lee, thank you so much for joining us.
Thank you.
Thanks, guys.
You bet.